Good morning, everyone. This is Brad Matheny. Today is the 29th of May, Thursday. Looks like we're going to have a very interesting day the way the markets are rolling here. So we had the NVDA earnings yesterday, big rally. This is the S&P E-mini futures contract. Um, Big rally after the market. We danced around the 6,000 area, which is about 599, 600 on the S&P. And now we're rolling considerably downward. Really going to be interesting how this opens up and if this plays out like I suggested. You may remember back over here, I had kind of discussed that we could end up in this 598, 597, 599 area after NVIDIA back over here moving downward. In fact, I think it was this chart. Yeah, it looks like it was this chart where I highlighted this potential rolling trend, opening maybe in the 598, 599, 600 area, setting up a top and rolling defensively downward. Now, we're not going to see that overnight activity, except we could see it on the S&P or SPY with overnight trading. But long and short of it is, folks, we're moving right back down into the 592 area, which is where we were back over here and back over in this area. We're actually below this high of 594 right now. We're moving downward, and that is an indication now that the hype with regard to the earnings data yesterday may have washed out of the market, and we may be looking at some sort of a breakdown. Now, where we're at with the SPY cycle patterns, we're moving into an inside Harami day today, followed by a crush day tomorrow. Inside Harami day would suggest that we're going to stay kind of in this area. So mark that as, I guess, I don't know, yellow. I would suggest that we're going to stay somewhere probably above the 583 area and maybe below the 589, 590 area, somewhere in this yellow range as a Harami day. Now we have the crush pattern coming up tomorrow. So that means we could see a fairly big move today. We've had a very big rolling trend. So understand that, we have been all over the map. When you come in here and take a look at this, we have been all over the map overnight. I mean, we closed down here at the end of the day, 5,900, got up to 6,000. That's a 100-point move in the S&P. That's pretty big, guys. And now we're back down here to this 5,950 and trending downward. More than likely, we're going to retest this lower range here as support before trying to decide what to do. So this means that really the SPY will likely continue back down to where we were yesterday, into this lower range, 59.17. And we're already seeing gold and silver react to this quite extensively. So pretty crazy intraday move. You can see we're up here, 592 and change. That's compared to where we were up in this 599 area way up here. We're already off a lot. We're off, 2 percentage points off the high overnight. And I would expect us, again, if this plays out the way I believe, we're going to open up maybe right in this area, continued selling, and then we're going to stay somewhere in this area here. Not quite closing this gap, but just kind of staying right in this 582 to 587, 88 area. That's what I think is going to happen. And then, of course, we get the big crush bar, which could be to the downside on Friday. So we'll see. Okay, gold and silver. Look at that ripper. This is 1 hour. Gold and silver really were undervalued, hit these deep lows. I kept talking about these low levels as the apex. This was our move, guys. Remember I talked about how gold needed to come back down into this low to set up this rally? Well, gold has set this low. We're now in that rally mode. Silver has come back down. This is hourly. Set this low, deep low. We're now up. We're now into that rally mode, looking to try to break away to the upside. And again, this is a pretty exciting time to be in metals, in my opinion, because I think this could be a very explosive move to the upside. We just had to get through this pennant formation, this flagging, as you can see here. And if I'm right, we're going to see a nice explosive move to the upside. 3,400 plus up here. And that would be 34 plus here on silver. So we'll see how things play out today, but very, very interesting big price rotation in gold and silver. I mean, we're not out of the woods yet. We're not breaking away yet, but this is a good solid rally, guys. This is a good solid roll at the end of flagging. We need to see this continue. Would likely see it continue, and we're looking at a gap potential move in gold in bullish normal accumulation, meaning we're tightening within this range. At this apex, we could get a very explosive move. So, like I said, we could be looking at a very explosive upward move here for silver and gold. And as I mentioned to you, once we get above this level, for gold, that level is 33.66. And for silver, that level is, even though we have been higher, 33.90. Understand that once we get above that level, we're cleared for a nice rally up into the 35, 36 area. Here with gold, once we get above this 33, call it 66 level, we're cleared potentially for a rally back up into this area here. And same thing back up here, 35.40. So I think we're looking at a nice big move here in metals, guys. Okay, Bitcoin. Let's come back over here to Bitcoin. Somewhat flat today, up $824. Really flattening out here, and not seeing a whole lot of correlation with the major markets here. I think the luster of Bitcoin will continue to fade up here if we don't see any big moves. So, as long as we continue to consolidate here, we're kind of outside this standard deviation range. Drag it out to here. Yeah, getting there. Kind of outside that standard deviation range. We tested it a little bit yesterday. We do need to see this move downward. And as I mentioned to you, this 106,700 would be my lookout level, meaning they're coming at this point, and 103 would be my breakdown level. At this point, we got nothing but sideways. So we'll see how it plays out. The Bitcoin data, I had it here, moves us into the 29th as consolidation. Yesterday was a blank day, which was pretty good. And then Friday, we get a trend inside breakaway. And then we get breakdown, breakaway, gap stall, revert flush next week. Remember, this is new. I'm kind of just seeing how things work and whether I need to change the patterns right now. But it gives us a little hint that we're looking at consolidation today, okay? Which is probably going to stay fairly flat as the metals try to settle. Now, yesterday, I don't want to run out of time. Come back over here. 9. Oh, I'm doing great. Yesterday, I spent some time going over some data. And, part of what I do in my work for traders is build systems, right? I want to make sure you guys have the best opportunity. And so I'm running these systems. And I built a system that's been around for a while called TTScanner. And this is the 2024 rank version, which attempts to rank things a little differently. And this is the historical back test on a 15-minute chart, 2,500 days. You can see it's going back, 5 months on a 15-minute chart. So we're going to get a lot of trades. It's going to be a good test of data. And of course, we're going to get everything from uptrends to downtrends to uptrends to downtrends. You're going to see everything in this cycle. So now I've modified it to what I call the Pure Alpha version yesterday. The Pure Alpha version is nothing more than a more highly restricted, highly, what's the word I'm looking for? So the entry triggers themselves are much more critical. This one is going to trade pretty actively. This one's going to trade moderately actively. Now, as you can see, we move into the 15-minute chart. We had pretty good numbers. You can see the numbers went up from 101 500 compared to call it 109 100.9 roughly here. So we've been about an increase of 400 or 500 bucks profit between these two systems and lesser trades. Okay, so we come over here, and this is a little bit tighter test. You can see the number of trades are diminishing considerably, right? So there's the original test. Here's the tighter test. Now we're getting into higher accuracy trades. We still have this drawdown, a couple $100. We move back into this upward channel here with a winner. We move through some sideways. We catch the big winner here, which obviously is April 3rd. That's the breakdown. And then you see we miss and avoid all this little chop. Still holding up okay. So now the results are quite nice. This is the original TT scanner. This is the Pure Alpha scanner. You can see that percent profitable 46 to 48 or 42. Average winning trade 82 to 26. Granted, it still made money, guys. The TT scanners are doing what they're supposed to do. They're keeping losses low and trying to let winners run. Okay, we had a total of 8 trades versus 20 trades. No long trades, only short trades here, whereas long trades and short trades were available here. So this tighter version eliminated all of the long trades because we just didn't reach the criteria. So now, as we move forward, this is test 2. You can see the results here. So what I'm talking about is look at the strategy drawdown. Gross loss 2751 minus 780. Big difference, guys. That's 1/4 of the gross loss. The net profit of 2,000 versus the minus, we end up with still a 400% extra profit. Profit factor is almost double down here, the 1.33 to 2.59. And what we're looking at here is average monthly return 248 to 182. Huge standard deviation monthly return is 179 versus 499. Huge, 2.5 times difference. This is a massive improvement. This Pure Alpha version doesn't trade as much, but it trades very solid, high probability triggers. So then I played and I had a little fun. And I went to what I call the version 3, called it the Diamonds Trades test. And this was, again, more restrictive, less trades. I wanted it to pick only the best that I could find. And so I got it up to 83% accuracy versus 42 in non diamond mode. Average trade win is 26 bucks versus 182. You can see 83% accuracy to 70 or 42. And we come back over here. You see, it made about the same amount of money. Okay. But in reality, guys, it only had 6 trades. Okay. Only had 6 trades total versus 35. And you can see these numbers here. Gross loss 61 bucks. Gross loss 2,751 bucks. Average trade account size required 61 bucks. So hypothetically a couple $100. Return on account is 1777.85. Not bad. On a minimum account, so you figure that out, about 1,000% return. Average monthly return 276 versus 182. Look at this profit factor 18.78 versus 1.33. These are really, they're restricted. It's not going to trade a lot, but this, what I call Pure Alpha, or diamond strategy is, you know, is really, think of it as the high probability system. It's not going to trade a lot. It's not going to trade that often, but when it does, it's going to have a fairly high return factor. Okay. So we come back over here and you can see average trade win loss 182 versus 26. So basically, at this point, you're taking trades where the average loss is 61 bucks off of one losing trade, and the average winner is about 230. That's, do the math. That's about 120, 240. It's about a 4 or 5 to 1 reward to risk ratio, which is very, very aggressive, in my opinion. So I started showing these off to some of my subscribers, thinking about putting this out as a limited resource for my subscribers. Right now, this version runs. I've shown you pictures of this before. This is the TT scanner, 15-minute data as of just a couple days ago, 527, 2 days ago. You can see some of these numbers. A 15-minute data, you're going to get, nine, basically 1 or 1.5, maybe 2% is a big move on a 15-minute chart. 0.5%, 1/4%, like you see right here, 43.43. These are more traditional moves. Here's the 5-minute. And again, 1% on a 5-minute is a pretty big move. 2% is huge. But you're going to get more in the 0.25 to 0.45% moves, because 5-minute trades only last around 7, 8, 9, 10 bars typically. So you get these 20s here. It means it's been in a trade for quite a while. On the 27th, that was a big up day. You're going to get some big moves, but the TT scanner triggers are pretty solid, and they run, fully automated, nice and clean, very effectively. So what I'm going to do potentially with this diamond strategy, let's call it, is set up a small group of symbols, the major ETF symbols, S&P, QQQ, IYM, and maybe a few others, maybe add gold and silver as well, and basically maybe add Bitcoin and set it up and let it run as a very high probability trigger mechanism. It's not going to trade very often. It's going to basically trade. This was over 5 months. It took 6 trades. So maybe one trade a month, but it's going to be very solid trading. Okay, just wanted to show it off, get your feedback. We're looking at, 2 notifications. We're looking at a pretty wild potential ride today. Like I said, 592. We come over here. Let's see what the markets are doing. Pre-market, I think we could, this is the SPY. I think we could really roll back down, like I showed you, into this area here, draw it in purple, and roll downward here. I think the NVDA data came and went, and now we're looking at what is in the future. So we'll see how it plays out, guys. Okay, go get some today. Talk to you later.